Good evening.
I'm joining today as a VP of BBA. We at Bangalore Value Association take immense pride in presenting to you the second day of our session on recent changes in IVS. Hope that you had a wonderful time in the day one, and I know that today the speaker will give you much more information about what further changes have come on IVS. So without much delay, I will ask Chandrasekhar ji to introduce our noted speaker for today. Thank you.
Thank you, Mr. Neeraj. So I take privilege to introduce Dr. GKR. Actually, about GKR, sir, no introduction is required. Everybody knows in the valuation. Sir, I've attended your several sessions of evaluation, IBC, and many sessions. But as in a formality, just to introduce, Dr. Gopala Krishna Raju is a chartered accountant, a registered valuer, insolvency professional, and is specialized in securities and financial assets. He is also as a tax assurance and registration partner at K. Gopal Rao and Company Chartered Accountants. And SAR family consists of all chartered accountants. His brother, wife, and his father also. And SAR has done more than 7,500 sessions on various topics, taxation, GST, finance, and other topics. So SAR is well known in the industry of valuation, accounting, audits, or regular take sessions at ICMA, also ICMA Institute on India's various topics. So I request GK sir to take over the session, and I think we would like to hear your discussion, sir.
Okay.
Yes, sir.
Very good evening, friends. At the outset, let me thank BVA and IOV for this wonderful opportunity to be part of a very unique program designed specially for valuers, that too on a contemporary topic. A topic like standards, valuation standards. It is very important that as professionals, we keep ourselves updated with these developments. International valuation standards. Time and again, these standards have been revised for some time. I will say especially post-COVID, during COVID, post-COVID, and now in 2025. Every 2 years they have updated. 2020, they brought a IVS version. 22, they brought an IVS version. 24, they brought a fully revised version effective from 2025. I'll be only taking some of the important changes in the general standards. These prescriptions are applicable for every valuation report. Whether I am a financial instrument valuer, or I am a machinery valuer, I am a gold valuer, I am an intangible asset valuer, I am a property valuer, I am a business interest valuer. So whichever kind of valuation I do, whether I do a regulatory valuation, transaction-based valuation, these standards are applicable. Now, let me go into the subject slowly. First, I will just give you the two standards, 2022 version and 2025 version. First, I'll give you the fundamental some changes, and then I'll go in depth into the standard. let me share the screen. Yeah. Hope the screen is visible. So this is your IVS
Yes, sir.
2022. And this standard has now been updated. So this is your 2025 standard. Now, what are the major changes in these standards? I will take you to the general standards. You have 5 standards in 2022, but in 2025, you have 7 standards. My goodness. So it starts from the framework, scope, base, valuation approach, data and inputs, valuation model, documentation and reporting. When we compare this, your IVS framework, which is not part of your general standards, but it is also a recommended framework which you have to consider while applying the standard. Now, this framework, since it is not numbered and it is not part of this, people consider, okay, this is only some, this is only some opening pages. So like whenever you go to a movie, olden days, because many people are, I'm able to say above 40 or above 50 also here. So when you go to, especially 20 years back, when you go to some movie theater, before the movie, one government of India or a film division reel will come. 5 minutes only. 3 minutes, 5-minute reel will come. We will not give importance to it. So like that, standard starts from here. So glossary and framework, why we have to give importance? Especially framework. So, but there are some very important aspects in framework. Okay, so that's why framework also has been part of it. So I will just keep few pointers here. So framework is one major difference. Okay. So I'll list out the main areas which I'll be discussing, and you can keep this as a reference point. Okay. So, of course, is there a major difference between, so if you look at the framework and also the framework here, okay. So there are some slight difference with respect to the presentation. So I'll just share with you some interesting comparisons. Okay, please look at para 30 here. And also, please look at para 50 here. Okay. So the competence is one paragraph here. You have the use of a specialist or a service organization. So there is a difference between competence, which is a very generic word. Okay. Competence is actually not a noun. Okay. So it's just a verb. But your specialist or service organization is a noun. Okay. So specialist. Okay. Service organization. So these are some things new. Of course, these 3 paragraphs with respect to competence in 2022 and these 3 paragraphs with respect to use of a specialist or a service organization are almost will be very close. Okay. So I'll just share with you some inputs here. Please look at this. If the valuer does not possess the technical skills, expertise, data or knowledge. Data is actually new here. We don't have that word here. Okay. So please look at 50.2. If the valuer does not possess any of the all of the necessary skills, experience and knowledge, data is missing. Okay. So here they would added data. To perform all aspects of valuation, it is acceptable for the valuer to seek assistance. Here the word is called from specialist in certain aspects of overall assignment. Actually, they have used the word specialist here, but here they say from a specialist or a service organization. Okay, so providing this is agreed and disclosed in the scope. You have to say very clearly, I have engaged the so-and-so specialist or service organization. Now, who is this? Is the next question. Okay. Actual point here is this specialist is defined in 2022? So I'll go to glossary. Okay. So no specialist is defined. Okay. So I'll go to the 2025 definition, especially glossary. Okay. Whether the word specialist is defined? Yes. Okay. Whether the word service organization is defined? Okay. Yes. So who is a specialist? This is a very important change that has been brought out. I'll give you an example. Now I am a valuer, an SFA valuer, a financial asset valuer, a business enterprise valuer. Now I've been engaged to do the valuation of an intangible asset. Okay, that too a website. Okay, that too a website. Number one, a domain name. Number three, a server. Number four, a brand name or a trademark or a brand. So, do we have anything in our IBBA syllabus? IBBA syllabus is very, very small, okay, and they don't explore more in-depth inputs in that. Okay, so I will engage a specialist who it can be an individual or a group possessing technical skills, experience, and knowledge required to perform or assist in the evaluation or review and challenge process. A specialist can be internally employed or it can be externally employed. Okay. Now, I want to bring to your kind attention the same framework. In the same framework, okay, is there any reference to the specialist? Okay, so please look at this. Here, post this. The valuer must have the technical skills and knowledge to understand, interpret, and utilize the work of any specialist. So that I should have the capability, whether he has that knowledge or not. But who is a specialist? Okay. So this is one place where they make it very clear. Of course, this word technical skills, experience, and knowledge has been mentioned. Okay. Here, please look at this. If a valuer does not possess technical skills, experience, and knowledge, the same is repeated there. Okay. Now, so this is the fundamental difference. Now, in the framework, if he does not possess data, skills, experience, and knowledge, so that has been added. So the same concept has been ulta, has been considered as a ulta, as the specialist possess this. Okay. So very interesting way in which the definition has been brought out. Okay. So now, can you engage a specialist in your evaluation? Answer is yes. Okay. But you have to mention that in your scope. Very clearly, you have to mention that in your scope. And I will bring your kind attention to the scope also here, because there they have mentioned that as an additional requirement. Okay. So, because since the word specialist has come, I'll come to the service organization a little later. Okay. So I'll go to, along with this framework specialist, I will also go to scope and come back. Okay. The scope is where 101. And here, the scope of work must specify. Okay. So the items in scope. Actually, the word is must. Must means mandatory. Okay. So must means mandatory. Okay. So here they have given 16 items. A, B, C, asset or liability being valued, clients, intended use, user, valuer, valuation currency, valuation date, basis of value or plural, basis of value, nature and extent of valuer's work, nature and sources of information, special assumptions. Up to this is there in your 2022 also. So 2022 also valuer must communicate the scope A, B, C, D, E, F, G, H, I, J, K, L, M, N. Okay. After M, N you have OP. Okay. So here you have OP. OP. So there are 16 items, there are only 14 items. That means 2 items are added. What is a 2 item? Specialist. So in the scope, you must mention the word specialist, the use and the role of specialist. Are you considering a specialist? If you are considering a specialist, inform that in the scope. Okay. And what is the role? Okay. You have to mention it clearly. And the second one is the ESG factor. So I'll come to that. Okay. ESG factor also, because that is another new thing that has been brought out separately. So specialist is a definition, and also it has been included in the scope also. Good. Now I'll come to the service organization. Okay. So come to this service organization. So use of a specialist or service organization. Okay. Now I'll come to this 30.01. If the valuer does not possess the skill, experience, data, or knowledge, it is acceptable for a valuer to seek the assistance of a specialist, okay, or service organization. Specialist or service organization. So both. Now, what is a service organization? Okay. So let me take you to that definition. 10.24. Okay. So your specialist is 10.27. So this is your I'm sorry, service on 10.24. Okay. So 10.24. Now, must I'll come later. Okay. Now, who is a service organization? An entity, okay, or a segment of an entity, can be a vertical that provides information, okay, reports or opinions, including but not limited to providing market data, credit ratings, or other services to support the valuation. So, for example, you want to go for a market approach, okay, especially land and building. Because land and building is one area where market approach, because you have to compare land apple to apple. Okay, so generally, see SFA valuation, enterprise valuation, DCF approach, income approach mean future. So future you need to do a lot of corroboration. That is a different aspect. Okay. But land and building you take. And plant and machinery. We see today people want to know the scrap value. Okay. Now scrap value, how do you arrive at a scrap value? See, there are litigation oriented valuations will be there. There will be jagada, factory closed, everything will be lying there. Now valuer goes and he takes inventory. All are like that. So now he needs to give, because it is not in running condition. So should it, because generally whenever they give, they will ask 2 things. As is, where is, I want to demolish it, I want to sell. Sometime when you demolish it, certain things will only come as scrap. Certain things you can remove it and you can sell, and it can be reused. So very important in machinery, certain machineries will be in running condition, you can remove it and sell it because it can be reused. So then it is a reusable value. So Abu, highest and best use. Second, certain things you, when you try to demolish it and remove, it will be damaged. You cannot use it. So it is scrap only. So you need to get market data. So for some, you need a comparable, you need a reuse value. So where will you go for it? So therefore, there are organizations in our country who specialize only in getting these market data, because data is money today. We are sitting in a era where data is money. So providing market data, okay, they are called service organization. Actually, are they specialists? No, they are called service organization. Because from where did you got this number? How do you say this valuation is correct? So therefore, this is new. And in your previous 2022 version, okay, there is no such reference of service organization. Okay. And do you have any such definition? No, there is no such definitions. So this is a new aspect. Okay. And now I'll come to the next one. Okay. So quite interesting change they have brought out with respect to the framework. And I will also bring to your kind attention in the framework. Okay. I want to bring it one more aspect. Okay. Yeah. So this is one where there is a change. Okay. Departure. Actually, in this departure, they have given only 1, 2, 3, 4 paragraphs. Okay. But here, in compliance part or departure part. So departure is actually a negative word. Okay. Competence, non-competence is a negative word. Okay. So here all are positive word. Use of specialist. Compliance. Okay. Here look at the number of paragraphs. 1, 2, 3, 4, 5, 6, 7, 8 paragraphs are there. Here how many paragraphs? 1, 2, 3, 4 paragraphs. Now here there is a major change they have brought out. So I will go to a 2025 version, then I'll give you the fundamental difference. Any deviation would render the valuation non-compliant with IVS. This is repeat. Okay. So what they say, departure deviation that are not the result of this, okay, are not permitted or performed accordance with IVS. I'll reserve this particular paragraph also. There is one exception they have given here. The departure, you can only do it for LRA. Okay, LRA, meaning legislative reason you can depart. Regulatory reason you can depart. Authoritative reason you can depart. For example, what is regulation? FEMA regulation. FEMA regulation use a word called price. What is a word called price there? So transfer from a person resident outside India, transfer of a security from a person resident outside India to a person resident in India. What is the valuation they have used? Price. Now, price is not a basis at all. But will it be compliant? The requirement to depart from IVS pursuant to legislative regulatory authority takes precedence over all IVS requirements. So whenever the regulation prescribes, law prescribes, authority prescribes, SEBI is an authority, IBBA is an authority, CBDT is an authority. Okay. So when they prescribe, that is standard. Okay, IVS, it is compliant with IVS. Takes precedence over all other IVS requirements. Okay. Now come here. The same aspect they have given here, but the dimensions are different. Okay, I'll come. In order to be IVS compliant, valuation must meet the requirement of general standards. Okay, very important paragraph. Okay. IVS consists of mandatory requirements. So that is why the word is called must be followed. In order to state that the valuation was performed in accordance with IVS. Now, I must tell you something interesting, guys, here. Okay. So I'll just put this word must here. Okay. So this word must is actually used in so many places. Okay. It's almost in 106 places the word must, 106 pages, the word must is actually is there. Okay. So I'm just taking you to that word must first, which is in para number 10.19. Okay, so this is in your glossary. Okay, and please look at this. Must means mandatory. Actions that are mandatory, procedures that are mandatory. Okay, now come to the word should. There is one more word called should. Okay, this is 10.19. Must. And I'll take you to the, actually this word is also there here also. Okay, must is there in the previous one also. Okay, must. So they have become very big. Actually, must means mandatory, matter over. Okay, why do I say so many English? These English are not, it may not convey that meaning. Okay, and there's one more word called should. Okay, the valuer is expected to comply unless the valuer can demonstrate alternative. Very, very interesting. Okay, now should. Should is there in 121 place. So more should, less must. Wherever the word must is there, you have to follow. So should. Okay. So this is actually in para number 10.25. Okay. I normally say this example about difference between must and should. So when your mother says, okay, go to market and bring lady's finger. Okay, 1 kilo lady's finger you bring because I want to do what is that? Okay, so they say chapati with that one bindi masala. Okay, bindi masala. So Ma says go and bring bindi. You go to market, bindi is not available. So you buy baingan, brinjal, and then say, okay, baingan ka masala karo. So this is mother's approach. Okay, that is called should. So what is should? Okay, so here the word should means valuer is expected to comply. That is bindi you have to bring. Okay, unless the valuer can demonstrate. Bindi to nahi hai, so baingan mila. Can demonstrate alternative actions are sufficient. Okay. Now, wife is asking, see, today evening, dinner will be bindi masala. Okay. So then, what to do? You go to market. In market 1, bindi is not there, only baingan is there. Then go to market 2. There also another, go to market 3. Okay, there also another, go to next town. Okay. So then go buy the bindi there, then come back and then hand it over. Because actions are procedure that are mandatory. Okay, must. Okay. So please appreciate this fundamental difference between must and should. Okay. Now come here. So this is where the compliance is done. Once the word must is there, it has to be followed. Okay. Certain aspects of IVS do not direct or mandate any specific action, but provide fundamental principles and concepts that should be considered. Should and must I have explained. If legal, statutory, regulator are the authoritative requirements. So they use a word called legislative, okay, regulatory authority. This legislative was the word removed actually. Okay, please look at this framework. They use a word called legislative, regulatory and authoritative. Now instead of the word legislative, they use a word called legal, statutory, regulatory and or authoritative requirement. So LSRA, previously it was LRA, now it is LSRA. So it is legal, statutory, regulatory, authoritative. For the purpose and jurisdiction of the valuation, conflict with IVS. It will conflict. Why? Because fair market value under Income Tax Act, what is it? It is a arithmetic formula. Now where in IVS they give a formula for a fair market value? Fair market value, they say market value. You have to comparable all this stuff. So it is market value. It is not formula at all. So here Income Tax Act, so they actually conflict with IVS. Such a requirement should be prioritized, explained, documented and reported in order to remain compliant with IVS. Please understand, prioritize. This valuation is done as per Income Tax Act. This valuation is done as per FEMA regulation. Explain the regulation. Explain the income tax rule. Rule number, regulation number. Document it. Okay. Step 1, 2, 3 I have done like this. Report it properly. Then it is IVS complaint. Very interesting, no? So, if at all you follow the law, it is IVS complaint. So, IVS, it is in sync with. So, you follow legal process, you follow regulation process. So, whatever the regulation says, it is IVS complaint. So, this is one place where they have given a clarity. Okay, so here it was not that that clear. So, they have made it very, very clear. Okay, so, and it is not a departure. That is what they are making it very clear here. Okay. Now there is one more aspect. Okay. If there is any legal, statutory, regulatory, authoritative that significantly affect the nature of the procedures performed, inputs and assumptions, the valuer must also disclose the specific regulatory authority requirements, the significant ways in which they differ from the requirement of IVS. Okay. For identifying the relevant jurisdiction requires the use of only a market approach, as where IVS would indicate the income approach should be considered. So, especially the formulas given in Income Tax Act. Okay. So, sometimes you have in FEMA called as internationally acceptable pricing methodology. Okay. It is not valuation methodology. So, internationally accepted pricing methodology. So, actually, what is this internationally accepted pricing methodology? Will the real international acceptable pricing methodology please stand? What is that method? Okay. So, we don't have any such method. So, it is anything, for example, your international valuation standard, you can say they recommend this. So, therefore, I will follow. So, it is complement to each other. So, your FEMA regulation doesn't specify certain procedure or certain method. IVS prescribes a method. You can refer that. So, and make complement to each other. So that is where they make it. If any legal, statute, regulator, authority significantly affect the nature and procedures, sometimes your method, internationally accepted pricing methodology, okay, they don't mention any method. So what you have to say is, yes, your international valuation standard prescribes this. So I follow this. No. I will follow a legal method which has been accepted by Income Tax Act. Okay. Because FEMA, okay, FEMA is an act, FEMA is a regulation. So your Reserve Bank of India, your Income Tax Act prescribes certain method. So income tax method, you can say this is a regulatory method. I will follow this. Okay. Because specific legislative and significantly it will differ. Because there they say internationally accepted pricing method. What is it? You mention this. So this is where, and you refer that, and after that you say it is IVS complaint. Okay. Because I have not departed from anywhere the law says. Whatever the law says, I have done. Okay. So that is where it's, this part is quite, and they have actually mentioned both. Okay. So here they have given a clarity compared to your IVS 2022, your IVS 2025, they have given a clarity. So these two paragraphs are very important paragraphs. Okay. And I will now come to the effective date and all I leave it. Now scope. Scope I have already mentioned that you have the few changes. Okay. One of the important changes is the scope here. The scope here and the scope here, there is one main difference. Look at the scope. The scope of work, fundamental terms of valuation. Now here, fundamental terms of valuation or valuation review. Oh, so you have one more concept called valuation review. Okay. So I will take you to that terminology here called valuation review. So I'll take you to the glossary of 1992. Okay. So here the word value, valuer. Okay. Valuation reviewer is the person who does this, is a person as part of the valuation review. Now, what is the valuation review? Not given. So, rather than explaining valuation reviewer, they could have defined what is valuation review. Naturally, who will do the valuation review? Who will be a valuation reviewer? Person only. Okay. The same professional valuer is a valuation reviewer. So, this is not required. They could have actually defined what is meant by a valuation review. Quite important twist here. Okay. So, here they have defined. Okay. So, value review. Okay. So, this is the same. Instead of valuation reviewer, they say value review. Now, what is valuation review? What is valuation process review? Very important. Okay. See, we have this concept of peer review. Okay. So, what is peer review? Valuation review is either a process review or a value review or both. Sometimes the valuation report will be reviewed by another valuer. Sometimes the process will be reviewed. Now, when the process will be reviewed? For the purpose of peer review. Whether you have followed standards, whether engagement letter is there, scope is there, scope has been communicated, whether the content of the scope is as per the international valuation standard, because the scope contains 16 items. Okay. Look at this. Scope contains 16 items. So, and all the 16 are must. Okay. And out of the 16, only few items are if any. Okay. So, I will say only 2 items are if any. Okay. All other are mandatory. Intended use, if any. The reason for evaluation is will be used for intended user. If these two sometimes need not be mentioned also. For example, if the National Company Law Tribunal directs you to do the valuation, NCLT, okay. So, should you have to say only my lord has to use it? No, who are you to say? Because my lord only directs you to do the valuation. No, my lord only should use it. Should you have to say that? No. Say you have to be very careful because direction is given by my lord. You do the valuation, submit it. My lord, as per your direction, I have done the valuation. You only have to use it, you should not say, please. That is why you said this. Okay. Intended use, intended user. Anybody identified by the scope of as user of the valuation. Very careful. Okay. Can you mention it? That is, you have to, the wording should be very careful. Okay. As per the direction of the NCLT, we have done the valuation and we have submitted to the registrar, and this is for the review and for the purpose of this particular court or whatever the case mentioned. So like that you have to mention it or not. So we can have a debate here. So that is why the word if any, because it's a court direction. Okay, mediation. So there the mediation cell, they will appoint you. So can you say no, this only should be used for mediation? So you have to say who is appointed, they are appointed. So we are in the direction. So these two is if any. All other you have to say. So in the previous one, also we had these 2 if any. So 14 items were the 2 if any. So 12 plus 2, 12 mandatory, 2 optional. Here it is 14 plus 2, 14 mandatory, 2 optional. Okay, so we have to be very careful. So now, this is valuation and valuation review. So peer review process. Now what is the valuation review? They will only go through your process of valuation. An analysis by the valuer to assess the compliance or a component of an IVS applicable. This does not include an opinion. Remember, peer review are not giving an opinion. You have to give a conclusion. Yes, this fellow is a good fellow. This fellow has not followed. In my opinion, Okay, we are not supposed to give an opinion. Valuation process review, palichin we have to give. Okay, we have to give it very clearly. So this is one, I'll say, a new avatar. Okay, valuation review. So sometimes you may do the process review, sometimes you will do the value review also. Oh, actually, these things happen. I'll give you an example. Okay, so we have this avoidance transactions in what we call it as this uh, insolvency bankruptcy code, avoidance transaction. And one of the avoidance transactions is undervalued transaction. Okay. And there is a report already. One valuation report says the property value is actually 70 crores. Okay. And they have sold it for say 68 crores or 69 crores, very close to that valuation. Okay. But actual market value is not 70 crores, but it is actually 120 crores. Oh, okay, 120 crores. So now, so there is a complaint or a reference that has been made. So evaluation review can be, okay, to either a process review or a value review. The value itself can be reviewed. Okay. So, or both, review the process and also review the value, okay, and give a report. So that report will say process followed is not correct. Therefore, the value is also incorrect. The value is undervalued. Okay, that's it. Because the scope is review. Scope is not valuation. Okay. So then the court will say, oh, okay, then we'll appoint another expert valuer, an independent expert to do the valuation. So this is called a process review. So all this will happen. Okay. So these are all new developments. So which is not there previously. Quite an interesting turn of events. Okay. Now I'll take you to yet another change. This is actually 10.5 is a new para. If in the valuer's professional judgment, the scope is overly restrictive, this word is new. This may result, this may not result in IVS complaint violation. Okay. If the valuer professional judgment, the scope of work is overly restrictive. Now, what is overly restrictive? No. I will not give you, I will only give you projection. You ask more questions. So, do you have an order book? Do you have past data? On what basis you have put the percentage increase? Otherwise called growth rate. So, do you have a reference rate for your growth rate? It doesn't have anything. Okay. He said, don't ask me this. This is a number I will give. Based on this number, you do that. Then it is only a calculation report. It is not a valuation report. Okay. So, if in the valuer's judgment, the scope is overly restricted, because you don't corroborate, you only do calculation. Okay. Then you say that it is not valuation, it is only calculation. So, then it is not IVS complaint. Okay. So, this is where there is a new change. This point was not there previously. Okay. Overly restrictive. Okay. So, say this report, there are certain aspects where there were overly restrictive points were there. Therefore, this is not an IVS compliant valuation. You can conclude like that. So quite an interesting item. Okay. I will now come to yet another process. This point. This was not there previously because this definition itself was not there. Valuation process review and value review requirements. So here, if at all, if it is a valuation engagement, 16 items, 14 plus 2, 2 was optional. Now, if it is a valuation process review and value review engagement, then these 10 items are mandatory. Okay, these 10 items. What is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10? What is the type of review? Peer review. Agreed scope as to whether review is a valuation process review, value review, or both. Okay, it is only process review. Peer review is process review. Please understand. Sometimes the court can say, do the process review and the value review also, both. But the valuation should not be done. Only value should be reviewed, but don't give me a valuation report. So once the value is not correct, conclusion of the value is it is not correct. So then we need to do a new valuation. Okay, quite interesting. Then asset liability, identity of the client, intended use users, significant assumption, use and role of specialist procedure to be undertaken. So this is the review related scope and it is must. Okay, it is not should. Okay, right. Now, come to the next standards. I'll say these are all something very interesting. So valuation framework, I have given you the important aspects. Okay. Scope I discussed. See, this basis approaches 102, 103 is almost the same. Okay. I'll give you one more reference here. So you will actually be surprised. I don't know. I'll take you to this ICAI valuation standards. Okay. So just for reference, okay, the number alone, I'll give you the reference to give you how these are actually close. Look at this. Okay. So you are 102, 103. Okay. 102, 103. Okay. 102 basis, 103 valuation approaches methods. Your old 2022. Okay. 2022 it was not in sync. It was actually very good actually just to see this. I'm sorry, where is it? Sorry. Show you this. Heading. Look at this. This is 2022 heading. Look at this. 104 and 5. Okay. And our IC evaluation standards is 2 and 3. Look at this. See, now both are same. Your ICA evaluation standard which came in 2018. Okay. This is 102, 103 which came in 2024, applicable from 2025, which is in sync with your ICA evaluation standards. And look at this. Okay. Your first item is definition. Okay. So definition goes to the glossary. Okay. Now, 2 and 3, I'm just actually, I will not go into 2 and 3 because not much a difference. Okay. Very slight changes, few are there. Okay. Because wherever the word specialist, service organization, that and all they have included. Okay. So whatever I just now discussed. But this 104 and 105, totally new. Totally new. Okay. These two standards are new. Documentation and reporting, slight certain updates are there. Okay. So previously reporting was 103. So here it is 106. So here the reporting is 202. So they have gone to that. So once you start the work, this is before starting the work. This is when you start the work, 10201 and 2. This is the asset related standard. So like that, the ICA standards are given the number in a different format. But with respect to these two, it was a surprise for me. Okay, when I saw the sync between ICA evaluation standards. So I must say, 7 years back itself, ICA, they were visionary in designing it, or maybe ICA evaluation standards influence would have been there on international evaluation standards with respect to these numbers. Okay, whatever it is, or by coincidence. So now let me take you to this 104. Okay, so very important standard. So both standard 104 and 105. So let me discuss both. Okay. So let me take you to this. I'll take you to this 104. Very small standard, guys, not big one. Okay. Data and inputs. Actually, in 2022, not much importance was given to this. Okay. Data and inputs. but they have given input, the, what do you call it, as the significance with respect to investigation and compliance. So whenever you do the inputs, you have to be very careful. You have to investigate, then only you have to take the data. Like that, it was some generic view was given in 102. But what you should investigate, okay, actually, I'll give you the connect from here. Please look at this, okay. To be compliant includes valuation review must be conducted. Investigation made during the course of valuation must be appropriate, okay. Sufficient evidence must be assembled. Very generic, okay. There were no specific. So it was like these process has to be followed, okay. So what to follow? Okay, they were only mentioning the process. How to follow? Okay, it was not there. So it was a very generic standard, okay. But now this is specific, okay. Why? Because without data and inputs, okay, so your value depends upon this, okay. So I will go each and every paragraph here, okay. 104 data and input deals with selection of data, use of data to be used as input, okay. So now, before going into this, okay, I want to take you to the definition, okay. So in the definition, I am taking you to two things. What is data? What is input? Then I'll come to it. Okay. So I'll take you to the definition. Glossary. Now go to glossary here. Data. So 10.06. Now let me go to data. Quantitative information, qualitative information, both are data. So quantitative, numbers, kilograms, meter, percentage, growth rate, risk-free rate, all are quantitative. Qualitative information. So you have the workforce or loyal, okay, and there is no labor turnover. They have a very strong workforce of 120 plus, and not even a single person has actually resigned. So all these are quite, so that actually adds. So somebody wants to buy the company, the strong and loyal workforce is a big asset because they are all skilled, okay, with the company for so many years. Qualitative information, okay. The valuation can be factored to those things. So quantitatives are different, qualitatives are different. Many, you can say many things. And some of the qualitative information, not only workmen, environment, social, ESG, and governance. Very good governance. I'll give you one important aspect. Say, there is a brand valuation you are doing. Brand valuation. Okay. You do the quantitative and all. For future cash flows, that, this, and use a meme approach, multi-period excess earning method, royalty. There is RFR method. Okay. Whatever method you are following. So you arrive at this brand value. Now, there are some qualitative information. Okay. See, your company, they manufacture, they sell the branded products also, their own brand. So they also buy other branded products as a trading. They also do trading. They buy other branded products, maybe same brand, same products or some other products also. So because when they sell, they connect with so many people and they have a good network, okay, distribution network. So they are also comfortable in selling other branded products. So out of the total turnover, 100 turnover means 70% is branded, 30% is other brands. It's not unbranded. Other brands they sell. Okay. Now, you do the valuation of that brand. Like you do the valuation of the trademark, whatever you say. Okay. Brand and trademark are sometimes synonymous. Okay. Okay. So that's a different subject. So I will not go into it right now. So now, if you are doing the valuation of the brand, that's only 70% turnover. So you can only project for that. This another 30% turnover is actually other brands turnover. So you cannot take that for your valuation. But the other brands, they believe this brand and they hand it over. You also sell my brand. That's where. So that means their total turnover, okay, 70% turnover becomes 100% turnover. So 70 crore turnover becomes 100 crore turnover. Okay. So that means their brand is actually factors in pushing their total turnover. So 30%, 70%. So 3 by 7. So you can take some number and you can take the growth rate of the past. So how the past year's other brands turnover has increased. What is our growth rate? That growth rate, you can take an average growth rate. Okay, so that growth rate, you can add it to your brand valuation. Okay, so like that, you can take some factor. That is qualitative. So can it say quantitative? Actually, you take some number, but this is a quality information that influences your quantitative. Okay. How do you use that quality information for your quantities? Again, you need a number only. Quality you are converting to quantity. So this is one thing, and input. Okay. So input. So data, and then you have input. Both have been defined, guys. Okay. Now, can you say input is data? Actually, input is data. Look at this. And your previous, that is 2022, guys. Look at 2022. Here also they have given the definition. Now, do they have input here? No input. Do they have data here? No data. Data input are not defined at all. Okay. Now, what is input? Data. Assumptions is input. Adjustments determined to be relevant and assessed or selected by the valuer. Many adjustments. Actually, adjustment in accounting is a taboo. Adjustment in valuation is like having a hero means he should have a heroine. Okay, no. Hero should not fall in love, and he should not go around the trees, and he should not do it. No. Hero means he should love a heroine. So adjustment is the attribute of a valuation. So adjustment determined to be relevant and assessed or selected by the valuer to be used in valuation upon based on professional judgment. This is an input. Adjustment is an input. Assumptions are input. Okay. Data are input. Okay. So the data should be corroborated. That is why we'll go to the standard. Okay. 104. Very important standard. So quite an important, interesting number is this. Okay. So now many other things are actually defined. Intangible asset, intended use, jurisdiction, liability, liquidation. Many things it is there. It's already there. Okay. So now I'll take you to this data and input. Okay. So your page number 52. Okay. I'll take you to page number 52. This is your data. Introduction. Now, one of the important aspect here. Again, the word specialist or service organization. That means they will provide the data and input. Okay. If the valuer does not use all necessary data, same, you will get the specialist and do it. Okay. Now, come to the valuer must apply professional judgment to balance the character relevant data in order to choose the inputs in the valuation. So data can be given by, for example, company will give 10-year data. Should you have to use the entire 10-year data? Not necessary. Out of that, you may use 5 plus 1, 6th year terminal value. Next 4 years, you may not use it. 7, 8, 9, 10, you may not use it. So, relevant data. Okay, use for else. It should be accurate, complete, should be timely, transparent. Because the source of the data can be traced from the origin, because this is very, very important. From where you got the data. Okay. So, especially the future cash flows. Oh, no. I did the projection. Projection on what basis? No, I took 5%. 5% from where did you took? Okay. My past growth. The past growth, how did you calculate? Where is the number? Now, past growth rate is 2% or 3%. Why did you take 5%? Okay. So, no. There is an assumption. What is an assumption? Assumption which is present. Presently, you have certain situation that is called assumption. There are certain assumptions, there are certain scenarios that will happen in future. I am unmarried today. Okay. I will be a father tomorrow. That means what? What is a significant assumption? I will be married, then I will become a father. That's a significant assumption. I am unmarried today. I will have a child, and the child will be like this. That is not assumption, that is significant assumption. Why? As of today, you are not married, no? So you have to say the source can be traced from their origin, okay, how it can be connected. Data reflect the market conditions as on the valuation date. Set of data sufficient to address the asset or liability, and data are free from error and bias. So what do you mean by complete? The expenses list they would have given. They would not have considered rent at all. Okay, they only would have considered some of the major expenses. Rent, advertisement, business promotion, certain expenses which they should have actually considered, not considered. So that means, is it complete? No, incomplete. So all these have to be done. So this is very important. These things were not there previously. So in the valuation report, you can mention this and give the reason why it is accurate, reason why it is complete, reason why it is complete, reason why it is transparent. Okay. Then the input documentation, which I'll say is very important. Okay. The source selection uses significant data and inputs must be explained, justified, and documented. Documentation must be sufficient to enable the valuer applying judgment to understand why specific data was determined to be relevant. Inputs were selected and considered reasonable. Okay, so from where data came? What is the source? From where risk-free rate you took? From where beta you took? What is the source? See, in this concept of risk-free rate, sometimes they will give a different table, another table will give which risk-free rate I have to take, which beta I have to take. Okay. Beta for listed entities they will give, beta for an unlisted entities they will give. So both will be in the same website. So you have to be careful. You have to take it properly. So what is the source? Is it a dependable source or is it a free source? Is it a source exclusively for the purpose of sharing of these kind of data? For example, FBIL in India. Okay, so purpose is this is a data you can use it for all your okay spread okay yield curve. So everything you can use this data for all GSEC valuation. You can use this. So this is actually for all money market interest rate. You can use this. Forex rates you can have here. Fixed income securities related data you can have. Derivatives related data you can have. So this is a benchmark site. So you have to mention very clearly. Okay. The form and location of the documentation may vary based on the scope of work. Okay. So documentation, they have made one because the entire standard, 2-page standard. Okay. And I will tell you guys, this 2025 standard 104 is only 2-page. Coming years, this 2-page document will become much bigger. Now I will come for one appendix of this. And remember, appendix is not appendix. It is integral part of the standard. Okay. The valuer should be aware of the relevant legislation frame in relation to ESG factor. Okay. Should. Okay. Should is not must. Okay. But if you alternative things are there, you have to be aware about it. Okay. Now, ESG factor can be considered and you can factor up or factor down. Sometimes environmentally you will be only damaging. Thereby your valuation can come down also. Okay. The impact. Okay. The impact can be positive, negative. Okay. Environmental related factors. Okay. Now, I'll just take one example. Okay, like some factors like social factors. Okay, so I was giving the example of this branded, unbranded. Okay, when you do an intangible asset valuation. Okay, so and especially you are doing the valuation of or enterprise value of a food industry. Okay, food industry. In food industry, certain things are very important. What is it? The health related. Your food should have the safety standards, health standards, no Ajinomoto, gluten free. Okay, so all this stuff and all. So you would have got certain certifications. Those certifications are development of human health related. Okay, so maybe if you are in HIPAA related standards in US and all, they are all with respect to health related certifications. Now, you may be in IT industry, technology industry, then privacy of data, for which you have a certification, data protection, for which you have a license and certification and audit that has been done, certain ISO process you have certification. All this can add to, these are all, they say, factors impacting a valuation. Okay. Now, the only problem here is how will you arrive at this factor? Okay. You have various mechanisms, measurement methods, models are there which you have to arrive at. So, that is where your next standard is important. First time.
Sir, Gopala Krishna Raju, sir. Sir, this is Supparao, sir, from Bangalore Valor Association, Vice President. Okay, just 2 minutes time, I request from you to explain about our Bangalore Valor Association. There are a few members like land and building value, plant and machinery values joined. Just a few minutes, sir. 2 minutes. Are you okay, sir?
Yeah, please.
Yeah, thank you very much. So, can I share my screen?
Please.
Yeah. Yes. Hi, everyone. Myself, Venkat Supparao Kalva. I am Vice President Membership from Bangalore Association. First of all, thank you everyone for joining this session, which is very, very important on IVS 2025. As you know that as a valuer, we need to apply international valuation standards. And again, we need to mention in our valuation report also whether which standards you are following. As we discussing today, okay, this first of all, I thank for all speakers for these 4 days. And also, I would like to give small information about Bangalore Valor Association since there are a few new members are joined in this session. First of all, Bangalore Valor Association is registered under registered with the Society Registration Act and is a non-profitable organization and based out of Bangalore. And also, like, we do regular webinars on second and fourth Saturday morning, 7:30 to 9:30 on various valuation concepts, especially on new valuation concepts we do. And almost we are running like more than 4 years, and this is the 5th year. And even we did not miss even one second Saturday or fourth Saturday in conducting sessions. And we have two main memberships. One is a primary membership and associate membership. Primary membership, it is a registered valuer who are registered under securities and financial assets. And again, we have associate members who are registered valuers of land and building and plant and machinery. And this membership is annually starting from 1st April to 31st March, it will end. And we will be having, once you become a member, the benefits is, you will be added into BVA members group, where you can get, the doubts, whatever clarification you need, you can get in touch with the members. And again, you can post your queries and you can get that answers. And also you have website access also you will be having, and where you can see the old whatever the sessions is having, and we upload, and you can also check that one. And also, apart from these webinars, like second Saturday, fourth Saturday, we do again like physical sessions quarterly, once again twice, also in various places. Like we have done recently in Coimbatore, and we have done in Chennai, like that, where you can again participate with less fees. And
Yes.
this membership again, the last date for the next year, 25-26, is the 31st March 2025, where you will get like a 20% discount. Okay, like if you registered on or before. That is one. And again, we also do CEP programs where it is mandatory for all valuers. We entered, okay, associate with the different RVOs, and we'll get the CEP certificates. And also we conduct workshops. And again, as I said, okay, expert community support, where you will be registered with BVA. And again, regular webinars. This just I want to give this information. And if you have any doubts, okay, we can discuss for 2 minutes if you want any information.
And Mr. Subbarao, I think we have got a 20% early bird discount, no, if it is registered
Yes,
before 31st March.
yes, we have that.
And our programs are basically SFA based, right?
Yes, programs are basically SFA based, but you will be again, okay, in the BVA members, and where you will get, okay, networking, as well as the whatever the new methodologies, new scenarios you will get, you will be updated regularly.
Yes. Yeah, sure. Thank you. Subbarao.
Thank you. Thank you, Gopala Krishna sir. You can continue. Thank you very much.
Yes. Thank you. Thank you. Thank you, Subbarao Garu. Thank you.
Thank you very much.
Sir, I have one doubt, sir, on this ESG compliances. Can I ask, or will park it later, sir?
No. Please go ahead. Kindly introduce yourself, your name, your academic achievements, and your location, and then please share your question.
Sir, I'm Chandrasekhar, which I'm interacting with you. I'm from Bangalore. Okay. Sir, on this ESG compliances, you were saying that it is a part of it. First of all, when we do the valuation, we'll be focusing more on the numbers, financials. Other factors will be giving only to the extent of a business, technical, and also business evaluation. ESG is not a quantity related. This is a quality related. We don't get the information. Second thing is, most of the time we'll be doing private limited company valuation, and by default is not mandatory for them. And so if we do not get the information, first of all, we don't get the information. If we do not get, do it calculate this amount as a part of our WAC, increase the risk. Option number one. Option number two, suppose if the company, if it's in the ESG compliance, can we give this, can we reduce the WAC, say that company then add the value? So what are the viewpoints, sir?
Mr. Chandrasekhar, nice point you have brought out. I'll taken one example. Say a brand like, because you are all from Bengaluru, Karnataka, I'll take a brand from Bangalore. Kothas Coffee, they make a 300 crore turnover.
Yes, sir.
And please understand one thing. This is one brand that they have developed over a period of time. So whenever you do the enterprise valuation or their brand value, whatever it is, so there are certain factors like social factors. Number one, the kind of employment what they provide for the underprivileged persons. In Tamil Nadu, very similar to Kothas Coffee, you have one food item called Shakti Masala. So Shakti Masala is very popular. So they employ women, and that too women who are not, they are all destitutes, widows. So those women who have been left by their family, so they take care of them. It is a social cause they do. And whenever you do the valuation of such companies, these factors have to be factored. Now, how do you do the factoring? You need to give a weightage. So we have various models which has been brought out by UNIDO, UNESCO. Okay, so UN organizations, lot of social impact assessment methods and all they suggest. In that qualitative approach, they suggest many models. So there are so many models are there. Now, Chandrasekhar ji, an association, an organization like BVA, you have to come out with examples. Like for example, Shakti Masala, how do, in case we do the valuation, Kothas Coffee, we do the valuation, Grand Sweets, we do the valuation, because these are all traditional brands. Why I'm saying these are all traditional brands. Idayam Nallannai, Idayam Ginjili Oil. So all these, when people do the valuation, they do 1,500 crore turnover. Idayam, and the Anachi is not, he doesn't want to, he knows how much people love them and all. But when you do the valuation, there are certain factors which will be beyond numbers. That is called the intangibles, which is not visible in balance sheet, which you can only feel it because of where he was, where he is today. And I give you two brands. I give you Kota coffee. I give you a different coffee. I'm sure definitely you will not prefer the coffee other than Kota coffee.
Yes, sir.
So then what is that that attracts you towards Kota coffee?
That is that
Some factor.
factor, sir.
Some factor.
Yes, sir.
So as a valuer, you have to narrate that story and tell. It is like when a superstar movie will come, people will say, movie is very good, super, excellent, the top dugger. It's going to be the top grosser. It will cross even Jailer. It will cross even Basha. It will be double Basha. So all this you have to give build up. So very similar to that, you have to bring the story and give build up in your valuation report. Factual build up only, not unfactual build up. That built up is what is your consideration, and then convert that to a number. So how do you convert to a number? Qualitative to quantitative. So we have various models there. Nobody will question you. So Chandrasekhar ji, why did you do this arithmetic? It is wrong. You have considered it. The standard says factors impacting a valuation for consideration. Have you considered it? Yes. Whether I have over considered it or less under considered it, you narrate why you have considered it and what basis you have considered it. So that is where that story is very important. You have to come out with a story.
Thank you, sir. I think we need to consider going forward these ESG factors in a part of our valuation report.
Indian brands, Indian companies, Indian small and medium enterprises, they are having ESG factors. Don't think that only listed company, BRSR report only, they have ESG factors. We are only coming from a top-down approach. But actually, India lives in villages. And today, when we speak about Tirunelveli halwa and Tirunelveli arua, and there is a skill set involved in making that halwa. So that is a social factor. And how many people have actually, because of the Tirunelveli halwa, they have become rich. So they will say this is Tirunelveli halwa, but not Iritikada halwa. Okay, Iritikada halwa is the starting point, but so many people have benefited out of it. So bring that factor into consideration.
Thank you, sir.
So now I was referring to this factors and all. Now, how do you consider it? Some model. Now, first time, I am actually very happy seeing this standard. If you ask me to give vote for out of this 7 standards, if these 7 people are standing for election and you have to choose one standard first vote, I will give my first vote to one IVS 105. I will not give a vote for any other thing. Okay. All other are, I don't say that it is not that important, but my first vote is for this 105. The first time I have brought out, I've come across that a valuation model has to be mentioned in your report. Okay, please look at this. IVS 105 addresses the selection use of model to be used in valuation process. So what is a model? It can be arithmetic. Okay, book value, A plus B plus C plus D minus L. It's a valuation model. So use a Black-Scholes, Merton model. Okay, so that's a valuation model. So no model without the valuer applying professional judgment. For example, an automated valuation model can produce an IVS compliant valuation. This is given in bold. I'm telling you, this is very, I really appreciate this. For International Valuation Standard Council, for this line, I really appreciate. Okay. Now, no model without the valuer applying the professional judgment. Okay. So, for example, this line and the next line both are not same. Okay. The second line is an example. So, for example, an AVM automated valuation model can produce an IVS compliant valuation. Now come to read the first line. No model without the valuer applying professional judgment. Okay. Now you give a model, but there is no professional judgment. Then it becomes only arithmetic. Why you are selecting that model? You have to give reason. Model will give the value. But why that model? So the 3-letter word why has to be explained. I'm using this model. I'm using this formula. I'm using this method. Okay. Because this method is the best method. Why? So this is where this particular standard is important. Actually, whenever the specialist organization, specialist valuation process review, actually what is valuation process review? What process you have followed? How did you arrive at the value? Value review. So is it any model? Why did you choose that model? Is there any reason behind it? That actually anchors your valuation report. That is where it crystallizes your valuation report. Okay. So I'll just take you to a para wherever the word must is there. Okay. Now come here. Valuation model must be suitable for the use of the valuation consistent with it. So this is the where the use the word called must. Okay. What is valuation model means? You apply the number, it gives an answer. So that is the definition of it. So I will not go into it. Okay. Now the next paragraph, which is very important, is 10.04. Valuation models used must be tested. Oh, to ensure accuracy of the output. So is appropriate for the intended use, basis and assets and liability being valued. So you apply other numbers. See the answers, see the test results. Okay. Especially when you do the Excel working. So this Excel working or any spreadsheet working, whatever models you have created, it must be tested. I really, I like these kind of, this standard. Actually, until this standard came, I was not that connected with IVS. Okay. So, okay, it's like this only. But this is one standard where I really like it. Okay, because one, they say you connect the model with the use. They say you test the model and report that my model is tested. Okay, for example, I'll tell you, see, because your arithmetic, your calculation, your structure of your spreadsheet formulas, somebody has to verify. Somebody has to actually audit it. So self-audit. This 10.04 is actually self-audit. Now, what if your formula is wrong? Your evaluation is wrong. So so that is where the standard is important. Okay. So test your model. Okay. Now, how do you test your model? Give various answers. Okay. And then satisfy yourself. So this is the next one. And come to 10.05. In all cases, valuer must apply judgment and professional skepticism, selection, use of valuation model, and the application of inputs used in valuation model. Okay, judgment. And please look at this. No model without the valuer applying the professional judgment can produce an IVS compliant valuation. So you remove this, for example. Okay, I'll take this line alone and read it once again. Okay, no model without the valuer applying professional judgment can produce IVS compliant. So if I am only using an automated valuation model and I don't use a judgment, okay, what is judgment? Testing is one judgment. Yes, this works. It works for 5%. It works for 0%. It works for 11%. No. Growth rate cannot be 12%. It will be absurd. Growth rate can be 4%. It works. Growth rate can be maximum 6% or 6.5%. It works. The India GDP rate is 6.6%. How can the growth rate be 7%? So you should have a reason. It should be more than that. You should have a reason. That means it is super hyper business. Okay. So we need this. Actually, read every line. Okay, very nicely they have written this. Okay, so I don't have words to say. So even though you apply the model, even though see they have given a check for automated valuation model. I have software. Software will do everything. Have you applied your judgment? If software is doing the valuation and valuation report, you have the chat GPT today. Okay. So it can actually do everything. Okay. It can give the entire valuation report. Okay. So give an entire valuation report. It gives. It gives. Okay. So valuation report of an intangible. Okay. Asset of. Okay. Kothas coffee. So intangible asset, that is brand of Kothas coffee. Brand of Kothas coffee. So it can give actually. It will give. So today this is very simple. You can actually have any automation tool, but I have to apply my mind, my judgment. Then only this report is good. So otherwise this report is only, this will take data from so many places and it can give. So have you applied that corroboration? Okay, good. So now come for this part. So where am I? So tested. The use of specialist or service organization in a valuation model, maybe you can't do that modeling. We can hire one specialist. You give me a model for equity valuation, give me a model for brand valuation, like that you can say. Okay. So now characters of appropriate valuation model. This para number 30 is quite important. The valuer must determine that the valuation model is appropriate, which for the purpose of valuation models means fit for the purpose in terms of asset or liability being valued. Okay, sometimes you may even value a financial instrument. For example, a guarantee, a financial guarantee you want to value. Okay, so sometimes guarantee can be a liability. Okay, so how do you do the valuation? The scope of work and the valuation method. The valuer must apply professional judgment to balance the character of a valuation model in order to choose the most appropriate valuation model. I'll say this is a very important line. So automation valuation model, they use some formula. Only this formula, they will give so many other formulas are there. Choose that. Why you have to choose that? That professional judgment, you have to show that. If I'm using a AVM, okay, automated valuation model, whether judgment has been applied or not. Otherwise, that report is only a calculation report, not a valuation. The characteristics of an appropriate valuation model. Okay. Accuracy, completeness, timeliness, transparency. Actually, these has been already given in the previous thing also with respect to data and input. There are also accuracy, completeness, timeliness and transparency, same was given there. So, because this is also with respect to the model, you will put the input there. So therefore, it should catch that all these features. Okay, so that's why they have mentioned it. So this is a repeat only. Okay. Now, in certain cases, valuation model may not include all these character, all four. Maybe the formula is since you are using the machine, accuracy will be there. It will be error free. Complete depends upon whether you give all the inputs. Okay. So transparency, it is calculation. It will not be visible unless and otherwise you want it. Okay. So valuation model selection and use. The valuation model should be selected in the context of the use, basis, and asset being valued. Okay. I'll give you an example. Now, intangible asset valuation. Okay. You want to, you have selected, first of all, you have to select the method. Okay. RFR. Why you are selecting RFR? Okay. With and without method. Why you are selecting this? Mean method. Why you are selecting this? Now, once you do the mean or RFR, whatever it is, you have to make one model. Okay. Maybe the projection is for 5 years or 6 years or 7 years, 10 years, 12 years, whatever it is. You have this contributory asset charge. Which are all the contributory asset items? How that contributory asset charge percentage is calculated? So the valuation model should be selected in the context of the use, basis, asset being valued. This is the first thing. Okay. Each and every item is an input. Okay, so you design that. Input you will have separately. CAC rate, contributory asset charge rate for workforce, contributory asset charge for working capital, contributory asset charge for your other assets. So like that, you will have some percentage. You would have calculated it. That is input. Now that input you have to take it and put it in one model. Test that model. So now how do you do that? Okay. So this is that's why this para 40 is very important para. Okay. Regardless of whether valuation model is developed internally or externally, valuer must assess the valuation model and determine the fit for intended use. So you develop it or externally somebody develops it. Testing. So that is why before the numbers are arrived at, have some test data. So increase, decrease the value, have the same value for all years without growth rate. So higher cost, lower profit margin, negative, different numbers you give. Okay. You must understand the way the valuation model operates. Otherwise, I am not a valuer. This is one very good thing actually. Okay. No, Excel, you give me, see, it is very, you give me the Excel sheet. I have got one engagement. I'll release one valuation report. No, that means I have not applied my mind. So this valuer must understand the valuation model operates. So that means I will delete the entire worksheet. Entire worksheet. Can you reconstruct it? This is very important. Okay. So unless otherwise you understand the model, you cannot rebuild it. Okay. So sometimes replicating will be difficult, but you have written the logic, the steps. In the valuation report, you have written the steps. So you can rebuild it. It is possible. So it should be like that, vice versa. Your model should give the answer. The report should be able to build the model in case you have to rebuild it. Quite very interestingly, they have brought this concept.
Sir, I have a point. Shall I?
Oh, yes. Kindly introduce yourself, please.
My name is Shilpa Kiran. I'm a registered valuer SFA. I'm from Bangalore. Actually, in this context, I want to tell about same, sir. Equidam, like that one valuation software is there. Okay, when someone suggested me and I started using it there, I had no clue how that it is showing some number, but how that number is coming, we have no clue. We searched all the manual, everything. but then still finally we could not understand how exactly first step, second step, third step, fourth step. They will assume something and software will give some value. I think this thing is really helpful that, we as a value should not use that kind of softwares. Just thought of giving my thought on this.
Yeah, very good, madam. Actually, you can use it, but you should know
Yeah, correct, sir.
what is happening. Okay, so that is actually, that is why I said of all the various standard numbers, I really like this standard. Very okay.
Yes,
So
yes.
that means you take ownership for that number. You take ownership for that number. Okay, so that's where this. See, if I make you stand before court, NCLT, my lord is asking a question. Yes, Shilpa ji, please explain how you got this number. Can you say, no, I used this software, I put the number, software gave this number.
No.
That's the problem. So good. So now I'll take you to this. The valuer must understand the way model operates. Now 40.404, the valuation model should be tested for functionality, output, must be analyzed for accuracy. Okay, I'll give you an example, especially the border numbers. What do you call it as? See, the terminal value. Okay, this terminal value, sometimes what you call it as border number. So 16.01, 16.0, in the growth rate, there will be some KE 16.01, that the accuracy level will be different. Okay, so that also you must test. Okay, and then you have to conclude, no, I will take 16.01 or I'll take 16. Okay, so because that 0.01 in terms of terminal value will give the value will be in crores. Okay, crores. So any significant limitation should be identified along with any potentially significant adjustments. Okay. So valuation model used over time should be maintained, monitored, assessed, adjusted to ensure that they remain appropriate. Now, what do you mean by valuation? See, in my office, so whenever another engagement is coming, they'll go to the old engagement, the old Excel sheet, whatever spreadsheet, already copy. They'll do the copy, change all those things and all. Same formula, which I have already designed it and kept it and tested it. Every day they'll use it, put the numbers and all. Now there is a problem here. Now, what is the problem? Not all clients, their line items will be same. Okay, sometimes there will be additional line items. Now, instead of 4 line items, only 3 line items will be there. Instead of 4 line items, only 5 line items, 7 line items will be there. So these things will differ. So valuation model used every time should be maintained, monitored, assessed, adjusted to ensure they are appropriate. Okay, so this is where, and people will do mistake. You have not missed that particular line because they go by that model. So the model will not take that one additional factor which has to be taken into. So that is why in my office, there is one standard. You do the valuation, but don't copy the previous model. You structure it. So in my office, everybody will get a chance. Okay, this time this valuation, who wants to do? Okay, have you done this? No, you do it. You refer it and do. You create the model. Let somebody else test it and then do it. So and already we will have one model. So in that also you put that and see whether same you are able to get. Okay, very good. Now you have learned it. So there are two things. One, you will also learn. Second, testing also will be nice because you already have one model, you have created one more model. Okay. So maybe you want to save time, you want to, people are negotiating the fees. So that is one place where I don't have an answer to say. But when you have to give the quality, because valuation report has to be unique. Valuation report has to be, it is not copy paste. So better to do right from the beginning, everything. So it is like you got a work order to create one Ganesh Vigraha in a stone. So already you have created Ganesh Vigraha and you have sold it. So now you have to take one more stone and you have to carve it. So you cannot copy paste it. Okay, so it is not like your Vinayaka Chaturthi, Ganesh Chaturthi, where you have one mold, put it and then take it. Okay. So if significant limitation have been identified, required, then there must be explained, justified, and documented. Okay, especially with respect to that formula. Because sometimes you will have some restrictions with respect to formula. For example, income tax act, they will not go by very fancy formulas, simple arithmetic formulas. So that is also a model. So don't think that that is not a model. ABCD minus L is a model. Okay. What is the significant limitations? Very simple. They only go by, okay, so one fair market value, one open market value, one stamp duty value. So there is a limitation is there. One fair market value where you have some 18 companies investment. Because 18 companies investment also you have to take fair market value for each company. So that is a significant limitation you have identified while doing that particular formula. That you mention it. Okay. Valuation model documentation separate. It need not form part of your report. Okay. Like for example, should have documentation. Must should mean do it, but don't ignore it. Support for selection of the model. Why you chosen that model? What are the inputs? What is the output? Test data. Significant input, main inputs. Limitations in that formula. Quality control procedures and results. So best is, in my team, we will have one or two seniors. They will not do valuation. They will only do QC. Send this model to them. They will do the verification. They'll take half an hour, 1 hour, send it back. I've tested it, 1, 2, 3. That test data, I put it in the next sheet or second sheet or third sheet. So documentation should be sufficient to describe why the valuation models are selected and considered by the valuer applying the professional judgment. Okay. And with respect to the valuation report, I have only one point. After that, I will leave the floor open for questions. This is one place where I want everybody's attention. Okay. Everybody's attention. Okay. Valuation report must convey at the minimum. Okay. Now here, I am bringing your kind attention to one thing. I'm sorry. What is it? This is the IBBI guidelines, 1st September 2020. In this, there is a, we have the contents of the valuation report. Look at this. This is the contents of the valuation report, which says A to Q. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 items are there. Okay. So now I'll take you to this 2022 valuation report. I mean, international valuation standard. In this reporting, here, look at the content. My God. Valuation report. I must convey at the minimum. How many? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. Only 10 items. This is in 2022. But your 2020 itself, 17 points were brought out. So 4, 8, 12, 16, 17. So this was only 10. This is 2022. Okay. Now 2025
Right.
must convey scope, assets or liabilities, identity of the valuer, client. So 4 items. Intended use, intended users, valuation currencies, valuation date. So 8. Okay. Basis, approach, method, sources and selection of significant data. So 12. Then significant ESG factors. Significant assumptions, findings and value. So total 16, 17 and 8. So 18 points. So compared to your IBBI, which is 2020 recommendation, this is a slightly wider. So it considers including the IBBI. So one more aspect which has been added to the significant environmental, social and governance factors used and considered must convey the following. So there are actually 18 points paras should be there in valuation. So guys, thank you very much for your patience for this evening today. And I'll be open for some questions. Hope you have, I have conveyed the important aspects, special aspects, main changes with respect to IVS 2025. Thank you very much. Thank you very much.
Sir, I have one basic doubt. This
Yeah.
IVS is revised. I think now BBA has taken an initial step to bring the awareness to the members. But we have seen many people, I think there is a lot of lack of awareness among the members. How I beware the who is going to monitor? So because we see a lot of challenges when we say the models, all the things, people say that they'll go to different valuers. So there's a lot of there's no consistency in the people. Few people they follow rigorously, few people they don't follow. So how to ensure the who is going to review and quality of the check? Is it RVO or IBBA? Sir, any thoughts, sir?
Maybe my views will be very crude. I don't know whether how you will accept it.
Sir, we are saying is yes, sir.
Insolvency Bankruptcy Board of India is a stepmother to valuation profession. So under section 458, an order, a notification has been given that until a new authority is formed, they will be regulating this profession. So therefore, and that is why they have given it to an RVOs. So presently we have 14 RVOs. And RVOs, they generally think that regulating the members is their function. It is not only regulating, but also educating, hand-holding them, and coming out with various publications and guidelines, technical documents, helping them to actually handhold valuers how this has to be implemented in various valuation exercises. So we as a self-regulatory organization, I will only consider Bangalore Valuers Organization Association a very good job you have been doing. So let us not expect government to do this. We are learned people. We are on the job. We are at the front end. We know the subject well. So I'm not boasting here, but you interact with the regulators. Hardly people there are concerned about valuation standard. So you ask them when it is applicable, which is the current year that is applicable. They are not concerned about it. Okay, so that is the current state of affairs. So you are expecting an IBBA to actually oversee whether who is following a valuation model and all. This is our own interest. Let our conscience say, my valuation report should be the best, and I want to excel in my whatever valuation report, whichever the price or the fees they are paying, I'm ready to sign. So then that is not a report at all. So please look at the wordings there. They place high reliance on the valuers. They consider the professional judgment of the valuer. So therefore, you have been doing a very good job. So you can enhance this. You can add more sessions, bring out more, what do you call it, as transparency in hand-holding members, bringing out various literatures. So thereby people are aware about it. So put it in your website, give free downloads, give as much information as possible to the professional fraternity. So that is the way in which you can lead the profession.
Sir, follow-on question is very importantly. Sorry, I'm repeating. IVOs, see, like, see, IVS is amended. There's no communication from IVO, IBBI or RVOs, nothing. We only took voluntary, say, we came to know that there is an amendment, then we took the, so when we discussed many people, no speakers, even people are a little lack of awareness, then we thought we took initiative and it's a great session. My only concern is, I think RVOs also, they're not even circulating these are amendments. So under this condition, members is also big challenge. So this is my concern. I thought to maybe so other members also can share. What happens once we start? Few people are complying, few people are not complying. So there are many challenges, sir.
Chandrasekhar, don't generalize. I interrupt here. Don't generalize. I'm seeing from ICMA RVO from January onwards, lot of seminars or emails on this IVS 2025. So don't generalize saying that RVOs are not doing.
No, no, no. Sir, I'm saying all RVOs. I know few are very good. I know not all. I'm saying all RVOs. So.
We cannot generalize that way. Okay.
Okay.
Sir, I have one question, sir.
Yes, please. Sandeep Agarwal,
Yeah,
kindly introduce
sir, I have two questions. One, you have explained the one internationally accepted methodology in FEMA and other. So what this exactly meaning internationally accepted methodology?
Very
And
good.
another question is that I am a ICI RVO member. I have to follow ICI valuation standard. So right now at this stage, do we have to follow this international standard also, or just only ICI standard?
Good question. So I have written one article. The name of that heading of the article is, will the real internationally accepted pricing methodology please stand up? Okay, so this is that article. Now, what is it I have concluded is, so they have not defined. So there is a fundamental difference between Income Tax Act and FEMA. In FEMA, they use a word called internationally accepted pricing methodology.
Yes.
In Income Tax Act, they use a word called internationally accepted valuation methodology. So there are two different English they have used. Because in income tax, they have used a word called fair market value. In FEMA, they have used a word called price only. So therefore, they say internationally accepted pricing methodology. So I will remove the word price and the valuation from both the words. So internationally accepted methodology. Now, what is internationally accepted methodology? Now, India. Is India part of international? Sandeep Agarwalji?
Yes, sir.
Very good. So, in India, there are various statutes, rules which says follow this. For example, there is a Kichidi method given by Income Tax Act, Rule 11 UA. So it is a Kichidi method. Why? ABCD minus L. A is book value and B is actually open market price. C is actually fair market value. D is again stamp duty value. L is again book value. Now, this is accepted. This is a statutory method. And international valuation standard, just to know, I said, international value. Okay. Your international valuation standard says, in case your legal or statute makes a particular method, you follow that, then it is IVS compliant. Just now we read that. Very good. So now, internationally accepted methodology. India is in international. Now in India, there is a legal method that has been prescribed in Income Tax Act. Can I follow the same method and say this is internationally accepted pricing methodology? Correct.
Sir, as per that's what you have said. If there is a particular statute in a particular country, we are following that. It means that is an internationally accepted methodology.
India, I should follow some other country. My client is here, the land is here, the business is here, the shareholder is here, the assets are here, the money is here, the bank account is here. Why should I follow Europe? I'll follow India.
Yes, sir.
Simple.
Okay. And sir, next second question, sir, reply. Do we need to follow right now internationally valuation standard, because I am a member of ICIRVO right now?
No, I don't know why you are restricting yourself because I'm member of this, I'm member of that. First of all, Sandeep Agarwalji, what is your what is your professional qualification?
Sir, I am a company secretary and a registered valuer.
Very good. Company secretary. International Valuation Standard is a best practice. So let us use the word called best practice. I am following best practice. Simple. Who can stop you? You are a professional. I will not use a word. Why should I say International Valuation Standard? Say it is a best practice prescribed by IVSC. IVSC is a professional body. So there is a problem with our statutory structure because the company's registered valuer and valuation rules, in that there is two rules which specify that the government will come out with the valuation standards. So that is why ministry is not coming out with, no, IVS is there, so we'll follow that. So, and we have other three professional bodies. One professional body has come out with one valuation standard. The other two professional bodies are not agreeing to it. Either they have to come out with it. So we have some emotional we are not comfortable with the way things have been structured. But will that restrict a professional for following the best practice? In your report, say, I am following the best practice. Who will stop you? So that is very important. So let us, because your mind, you are a professional, you are a seasoned guy. So you know which is best. So if IVS, I have even compared. I've even compared ICA valuation standard with international valuation standard. 2018 itself, they have numbered 102 and 103. In 2025 only, IVS have numbered it. So that doesn't, who is best, who is not best is not the question here. Whoever gives the best, I will follow that. And I will take, you are like Kichadi. You have to, if in here some best is there, take 1 spoon. Here one best is there, take 1 spoon. Your valuation report will be the best.
Okay, sir. Thank you.
Can I ask a question, sir?
Yes, Sanjay Gupta ji, kindly
No.
introduce yourself.
This is Krishna. Oh, Mr. Sanjay Gupta, if you want to speak, please. After that, I will.
No. My question to Mr. Raju is really, let's say that there is a conflict between the standards, correct? IVSC and ICI, for that matter. Right? I am a member of
Tell me
ICI.
one conflict where it is conflicting.
So let's say data inputs, correct? If that is not defined there and it's defined here, I'm just taking an example. I'm not saying that, correct? And we are going according to
That's
a
not a
data input which
conflict,
is there.
that is an absence.
Okay. So if that be the case, then what is the rule that one should follow? As you suggest, Khichdi, take some from here, some from there. Is that what we should keep on doing, or we should just stick to our RVO and what our RVO is
ICA
mandated?
valuation standards also use a word called professional judgment. IVS also uses a word called professional judgment. Now, when I'm using my professional judgment, I will follow best practice. In my valuation report, I quote both the standards. Wherever the best is there, I take and quote it. I never say I follow ICA valuation standards. I never say I follow IVS. I say I follow both.
And it has not been challenged up till now, or at
Why
any
who
point of
should
time?
challenge it? Who have that authority to challenge?
Good point. Okay. Yeah, there is no authority to challenge.
I'm taking the best. I'm offering the best.
Sir, this is the first time you have explained. Sorry to regret. You mentioned both the valuation stand. Number of time I have asked questions. Somebody says that
That's very strange. Yeah.
ICI valuation standard. Some say internationally. This is the first time you have explained that you mentioned both thing in the report.
Yes, sir.
No, I do it. I can show you my report also. My reports are in NCLT. Before the court, it is there. Today, I submitted one report in NCLT. I mentioned it. Both standards, I mentioned it.
Yes,
Okay,
sir.
sir.
So I very clearly say I refer the para number sometimes of IVS valuation standard. Certain places I defer. For example, going concern value. Going concern value, these international valuation standard, they have not defined.
Okay.
ICA valuation standard, they are defined.
Okay.
Yes.
So you tell me, I will only follow IVS valuation standard. Why should I follow IVS? I'll follow both.
Yes, sir.
Yes, sir. Okay,
Yes,
sir.
sir. Sir, I think that is the GKR, sir. So he gives always very crystal clarity. There is no differentiation. Whatever best, will take best out of it all.
Take the best.
Yeah.
Be a professional. Be a professional. Don't restrict yourself. You have to give the best value. Your value must be dependable. I take the best tools. I will use a Belgium, what you call glass. I use an Italian marble. Should I have to use only Italy to construct my house?
Today, this point is very, very interesting that you made, and a good
Sir, I am
takeaway
very
for all of us,
practical.
for all the
Sir, I
60
have to
people,
give the best to my
60
client.
plus people that we've got here, a very interesting takeaway for us.
Sorry to interrupt. In the interest of the time, since 8 o'clock and people plan. So if any one or two questions are quick, you can take.
Yeah,
Otherwise,
please, may I?
Krishnanji, yes, sir, yes, sir.
Yeah, I am a P&M valuer from Kerala. Thank you very much.
Kerala, evada, sir, Krishnanji.
Kerala, Naduvilano, sir. Kochi. I am in the middle of Kerala. Actually, probably I am the only one attending this session from Kerala. But anyway, thank you very much.
I am the ardent devotee of Padmanabha Swami. So,
Thiruvananthapuram. God bless you. Thank you, sir. Thank you for an entertaining or very intelligent and factually enriching session. And also thanks to BVA. Now, my question is, I am a P&M valuer. I have taken up this profession after I retired from my service, as I was in the board of a couple of power companies. And then now I am a valuer, P&M valuer, RV, registered valuer. Now, my doubt is, I have developed my own Excel sheets for valuation. So can I call those as models?
Definitely, yes. Have you tested it?
Yeah, I think this peer reviewed by other P&M valuers.
Krishnanji, very good. Very good.
Okay, sir. Thank you. Now,
are you reviewing it every now and then, or is it only same you are following it? Are you adding, structuring, improving?
Yeah, in the next question, I think probably that also will be answered. The next question is, see, there are for P&M valuation, there are different methods, different approaches. Sometimes when you have, say, hundreds of items, you may have to use a different approach and different method for different items. So I will be using not a single model or single Excel sheet. I will be using 2 or 3 Excel sheets and then put everything together. Of course, the obsolescence and other discounting factors, I may have to use my professional judgment. So, and also the life, say companies rule 2013, it gives some life, but that is only a guide for me. But when I see the plant and machinery myself with my eyes, based on my experience, I know, and also looking at the maintenance history, I know how long it could survive. So, suppose somebody says 25 years, but I may, based on my experience, I may say, no, it will give only 20 years. It has already served 15 years. So I will use only that residual life as 5 years. So this is what I do. So what my doubt is, can I use 3 different sheets, which I call it, so now as per IVS 2025, 3 different models.
Definitely. You can. That is why
my judgment is already used. Personal judgment is already used in various discounting factors that I use.
Very good, Ji. That is how you have to do it, and really appreciate that you have come out in sharing these information. And
thank you, sir. I mean, when we heard so many things are new in 2025 IVS, we were all worried, but your session has cleared a lot of doubts. Thank you very much. And thank you.
Krishnanji, can
yes,
we have your number? I'm also a plant and machinery valuer.
Yeah, 999.
Sir, you can
share. Can I tell you?
999.
Okay, I will put in the comments now.
Yes, sir. Please, yes, the chart. Please share in the chart. Sir, any other
Okay.
questions, sir?
I don't have. Thank you. Thank you very much.
Okay, sir. Any other participants? Any questions? Can I request Mr. TVS Prasad to give a word of thanks to Dr. GKR, sir?
Good evening, all. I have the privilege of giving the vote of thanks. Now we have seen Rajinikanth in action and in teaching. He is the Mr. GKR, Gopal Krishna, Dr. GKR, Gopal Krishna Raju is known as the Rajinikanth of valuation. So that is why I had directly told Mr. Rajinikanth. So as usual, his quality is assured. The way he teaches, which is his fan following. And then particularly our Bangalore Values Association say cherry picks the speakers. And we are fortunate enough to have Dr. GKR as our faculty member for today's session. And Dr. GKR has, as usual, had explained so all the important standards and what are the differences and previous standards and current standards, and in some important terminologies like what is must, what is should, etc. I had the privilege of attending many of his webinars. So whatever the topic is, he covers it extensively and in depth. See, he turns no stone that is not covered about the particular topic which he covers. Yeah, I'm very much thankful on behalf of all the participants and BVA, and we are enriched with the knowledge you have shared with us. Thank you, Dr. GKR, and we look forward on behalf of the BVA to have many such sessions for the benefit of all our members. And as a token of our gratitude, we are sharing one memento with you. It is shown on the screen for the immediate reference of Dr. GKR as well as other participants. It will be couriered to you soon. And I want to share one small information. Tomorrow, at the same time, sitting between 6 and 8 p.m., we'll be having another important session on SFA valuation standards by FCA Uttam Padiwal, who is also a member of BVA. And I request one of you to attend this session without fail. And even other members who are not SFA valuers can also attend the session. Again, Dr. Gopala Krishna Raju, we express our gratitude to enlighten all our members about the major changes in the latest standards. As many of us do not have any idea about the changes that are incorporated or rolled out by IVS in this 2015 version. So you have brought out all this in a very lucid way, and you have taken your valuable time and enlightened us. Thank you very much.
Thank you. Thank you, sir.
Thank you. Thank you very much.
Thank you.
Sir, can I end the session?
Yes.
Thank you, sir. Thank you, everyone.
Good night, all.
Good night.